my name is OJ and I'll be the host today. With me, I have my friends, Sile, Ebitu, and Tolu. And today, we are going to have a very interesting conversation on investing in USD versus investing in real estate in Nigeria, using a case study of Lagos. So, I've worked in real estate for like over a decade now, and a lot of the time, anytime I'm talking to a client about his real estate investments, he always as a matter of fact, I had a client in particular who taught me the value of money, because every single time I had a conversation with him, he would always say, OJ, when I bought this thing, dollar was X, and today now dollar is Y. So yesterday I was watching a document, short clip of the evolution of the Naira over the years. So a decade ago, the Naira was 157 sitting here. And then today, it's about ranging between 1,003 and 1,000. So today, a lot of my clients so it's a big conversation of, should we put our capital in USD or should we put the capital in real estate? So that's what we're going to talk about today.
Real estate is a cash product in Nigeria, but not a cash product elsewhere for the most part in developed nations. Furthermore, it's defined mainly in Nigeria by its individual owners, which will set their own price based on their own, their own individual valuation. Trump got into trouble recently for, supposedly, yeah, and the question, because we're having this debate about valuations, anybody that owns a home outright or any typical non-homogeneous asset can set its price if there's no common market that defines that price, right? So real estate falls into that class. Someone can have their home in mile 12 and still call it $1 million property. It will require a third-party valuation to give it what is supposedly a fair value. And even said fair value, the seller has no pressure to accept an indicated fair value unless he is coerced by a financial obligation or otherwise. So that is the essence of the makeup of the Nigerian real estate market. It's cash-driven, it's individualistic sellers, and it's non-financialized and unregulated.
When the exchange rates were going really, 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 really up, and then I think at one point in January or February, it hit like 1,900, almost 2,000. So basically, everybody was really afraid. I literally had a client calling me almost afraid. They're like 40-year-old men, 50-year-old men, almost at the point of tears that, my God,
I've lost all
my wealth has been eroded. And then all of a sudden, we wake up in the morning one day and it's just coming down. And then you start getting all these articles of Goldman Sachs and everybody supporting this. So basically, I'm sitting there thinking to myself, asking myself, is that, okay, it was going up and then it came down. Has anything changed, particularly in my environment? So what, in my opinion, we've always done in Nigeria is that the Central Bank of Nigeria has always supported the Naira. Please.
I think a lot did change. Perhaps not at the ground level or the street as you probably point out, but just to highlight a couple of things. And like any commodity at all, the value of the Naira, I believe also the value of real estate is very dependent on demand and supply. We were at a place where there just wasn't enough dollars in the market. In fact, it was as bad as if you wanted to get $20,000 in the street, you couldn't find $20,000. Okay? And to give you an example, I've been out there before and cashed up to $300,000. I won't go, this is how much I can make a transfer with my $300,000. That's how easy it was, or it can be. But I'm telling you that up until sometime in March this year, you couldn't get $20,000 off the street, not without having properly planned it, organized it for days. Okay? So what happened? First is that we had a central bank governor that was appointed around October. Okay, it took a while to, obviously, I would say, reorganize central bank, at least a top hierarchical central bank. They fired quite a number of, actually, they completely took out all the deputy governors at the time, replaced them, and there's some reorganization going on. And I want to emphasize that it's very important that the central bank has credibility. The previous central bank administration didn't have credibility. What that means is that if you come out to the marketplace and you make an announcement, nobody will take it seriously. Okay? And so it was important that the new central bank governor demonstrated that, they could be trusted. So cleaning the house was very important. And in his views, that's why it took him so long before then coming down to addressing the monetary policy issues. He felt that they'd done a lot of work cleaning the house. Central bank had reached a point where there was enough credibility. That was time to take action. First move was on interest rates. The importance of moving interest rates is that if you and I, for example, very concerned about the devaluation of the Naira, as was the case you pointed out, right? Mm-hmm. And you heard that you could get, interest on your Naira for 25%. I think some people even doing 30% today. Okay? Some people are doing 30%, I can confirm that some people are doing 30% today on deposits. Okay, not at the commercial banks, but microfinance banks are doing up 30%. What that means, for example, is that if you're confident that you can do 30% over the next year or the next, let's even assume for the next 2.5 years, you could potentially double your money. Let's say you put in 50,000 Naira. You're sure that in 2.5 years or less than 2.5 years, you double that to 100,000. Okay? You're not so sure that at 1,800 to the dollar, that could devalue further. Say another 50% or thereabout. So it clearly makes sense that the Naira would be, a better option, because you know that in 2.5 years, the Naira probably wouldn't slip as much as that. And so that sets the path.
But can I ask, when a new administration or a government of a country takes control, who defines monetary policy? Of course, it's the central bank by definition, but, there is a relationship.
Controlling that.
And where's the hierarchy? Who influences who? In the Federal Reserve case, it's the Federal Reserve itself is made up of if I'm not wrong, the chairman of all the national banks, right?
No.
The board of the Federal Reserve.
The president of the Federal Reserve is appointed by the president.
Yeah, the president. But the board is made up of the chairman of
exactly of the states.
Yeah, states. Yeah,
Federal Reserve. Yeah.
Now, for whatever market or political influences they may have, the Fed is still an institution within the United States, as far as not necessarily under their constitution.
As fairly independent as they can find.
And then bring this back to Nigeria, because it's a question for anybody's central bank as well. Who does the central bank answer to? And how do they design monetary policy? If autonomous from the administration, then in partnership, how do they?
The simple answer to that question is that it is ultimately they report to the presidency. Okay. However, they are required to be autonomous. I know that's usually difficult, and frankly, it will then lie ultimately with whoever the central bank governor is in our case, or the president of the Federal Reserve. That's where his own discipline now really comes in.
Right. So
yeah, I mean, to give you an example, Biden has been appointed now. He's been president for almost 4 years. Yeah.
Yeah.
I don't think that he's had a personal interaction with the president of the Federal Reserve more than 5 times.
Not necessarily should he. There will be a Treasury Secretary that would necessarily have
this is true.
Regular interaction.
This is true. But it is the president of the Federal Reserve's, it's his responsibility to make sure that whatever is happening on the executive side or politically does not impact or erode the credibility of the Federal Reserve or its core mandate of managing inflation. It's very important.
Yeah, but
Very important.
core mandates. I wonder about their core mandate because
That's the mandate.
interest rate.
It's fighting inflation.
It's a mandate, but we have already agreed
Yeah.
that they are half handicapped because they are not responsible for fiscal policy.
Yes, this is correct.
And they are only responsible for monetary policy, which in many cases is not the sole or only tool against inflation. In fact, in many cases is completely blunt or useless. And in Nigeria's case in particular, for what is a much less financialized nation already, interest rates have very little bearing on the interest rate.
You're right. And that's why they have to use the tools that they have. So a very good example, interest rates, as you pointed out, they've raised that and might continue to raise it.
And not a good tool was my argument.
But you also have the CRR, for example. What you need to also do at the same time is that you are starving the market of liquidity. I don't know if you recall that the previous administration was accused of taking so much and the trillions from the ways and means, which is essentially just printing money. And flogging the market with so much liquidity. So increasing the CRR is trying to address that, to take off, all that excess liquidity in the market, which, by the way, was also was also a major player in the devaluation of the naira, because then you have a lot of naira chasing the dollar. Dollars, right?
Correct. Yes, and I agree with that.
Yeah.
And that almost comes more to fiscal responsibility, although there's a lot of monetary policy that feeds into that. And that's this weird relationship or gap is where I think
That's where the
a lot of
disconnect
things
is.
slip through, and we cannot necessarily define one policy that leads the nation's economy to one direction. Now, I understand their monetary objectives, but I just feel there is no evidence of its effectiveness.
It has been effective. And just to give you chronology of how it's worked, if I go back to my earlier discussion, there was a time in Nigeria we could borrow at less than 10%. Yeah. You remember?
I don't think I was born.
No.
This was in 2010.
Yeah.
Okay.
Yes, because I remember that I gave a loan Standard Chartered about 9-8%. That was the height of
Also,
margin loan time.
Wait, no, but see, our inflation rate at the time was 7%. Did you know we had 7% inflation rate? Yeah.
I understand.
Single digits.
Single digit.
Yeah.
You see, you aren't forgotten already.
I was in uni. But I mean, you know
Oh, wait, you have it in 2010?
Yeah.
Well,
But that was a statistical rate, if I
what
remember.
do you mean statistical rate?
Yeah, because we didn't feel it in
No, we're enjoying single digit. No, we're enjoying single digit for at least 2 years.
inflation, right?
Yeah.
Yeah, but I'm saying we didn't.
Central Bank Governor Sanusi Lamido Sanusi.
Yeah. But inflation felt more like double digit then. I remember seeing.
No,
I remember this.
no, it was single digit, and
It was single digit on record.
no. If it's like I said,
You're right.
I borrowed at less than 10%. Okay, so there's no way nobody would have given me money at less than 10% if the inflation rate wasn't sub 10%.
Sure.
Yeah.
Yes.
So, it's so interesting. I'm loving how we're talking about investing.
So to bring that now to real estate, okay, if you're able to bring, that was the whole idea, only that we derailed somewhere.
Yeah.
We got derailed, perhaps towards the end of the Jonathan administration. I mean, you can argue maybe the whole of the administration. Where it started, right?
Yeah.
But again, the point is that we can do a restart. Again, get on a plan, knowing that the journey will take us to where inflation can be. Inflation can be 2%.
Amen.
Kenya recorded a less than 3% inflation rate the last month.
What are they selling? Because better than selling.
Rwanda experienced less than 1% inflation
That by the way,
last month.
annual CPI.
Annual. Rwanda
3%.
Rwanda less than 1% year-on-year inflation. Uncheck it.
So
Those are economies that are well planned.
time to jackpot to Rwanda.
These are economies that are well planned. Generally, I'll say that East African countries are better managed than the West African economies. Why? I think that it has to do with just less corruption. I think that we have corruption here wholesale, whereas in East Africa, it's not wholesale. I mean, we can all sit down here and we discuss inflation like as if You
It
know,
wasn't corruption that drove it
it's
there.
like it carries no weight or penalties. Okay, and this is Nigeria for you. So it's a reason why the government, if this government is really serious about really taking us forward, as part of all the reforms that they're putting out there, tackling corruption has to be one. Number one, tackling corruption, judicial reforms. Okay, because it's one thing for you to identify someone as being corrupt, but also how do you make sure that he's being punished?
Yeah, but what about the issues of productivity?
Issues of productivity. No, so I've talked about that generally, in that if you have a plan, yeah, and you basically you brought all the different sectors together, you productivity will increase.
Let's bring it down to the guy on the streets. He's buying bread at 200 naira. And then that same loaf of bread goes from 200 naira to 1,002. Yeah.
Bread today is about that price.
Yeah, that stack. It's crazy. So again, all our grandmother, that quite frankly, there is already what? 400%. That's what I'm saying, 300, 400%. So my question is, you see, and that's where I started this whole conversation from. What is the determinant of real value? If things can change value that much, and bread is staple food, that's like, yeah.
There was so much at play. On one hand, I don't know if you're aware that the price of wheat, for example, has taken
because of Ukraine.
or outside whatever is happening between the naira and the dollar. That's one. Are you also aware that the price of sugar too has skyrocketed outside what's happening between naira and dollar?
We should do a ban on sugar. The rest is going.
Two
Let's just come on.
No, I mean,
the two major inputs to making bread.
and of course, fuel.
And fuel.
Fuel.
For instance, too.
Yes. So coming back to that imported inflation, our inflation is not unique to us. That's around the world.
That's why it was very critical for the central bank to tackle the devaluation of the naira, and that's what
agreed. But I've always said it cannot, again, not in isolation of fiscal responsibility, and I hope that Tinubu's administration has some sort of coordinated approach with the central bank. Now, the point being that if we identify the source of our inflation, like you're pointing out, we're talking about the global wars, particularly the European one. We're talking about sanctions against Russia that cut down natural gas and spiked all energy inflation that came through Europe and, of course, impacted places like us, Africa.
And the unrest in the Middle East.
Unrest in the Middle East, Suez Canal congestions and Houthi attacks, more product and inflationary effects. The increase in interest rates in almost all Western central banks. I'm not sure what our policy.
How are we defending ourselves?
Yes, because I'm saying, like, as far as our Paris debt, IMF, World Bank, I assume all those rates went up.
And they transfer it to us.
Our interest payments went up there.
So non-commercial debts tend to stay the same. So would have commercial debts that were fixed, and the bulk of our debt, international debts, are commercial debts.
Right.
Which I think on average would have been priced about 6-7% coupon.
Right.
Okay. So the loans from the IMF and co would be coming at less than 2%. So
and that didn't change.
So no, they don't change. To your point, I think that what we need to do, as I have suggested a number of times to the government, is we need to properly articulate what we want Nigeria to be like 5-10 years from now. I will start to solve the problem. But you see, as I pointed out, fiscal policy and monetary policy seldom work together. Okay, because the politics at the end of the day, or during the day, is what drives fiscal policy. Yeah, and I think that if I had to sum up what the politics of today is, okay, is that they're simply trying to make a couple of wins that keep up front, as you say, to give the current government the credibility it needs haven't come from a point of perhaps less or zero credibility. Okay?
Sure.
On top of the fact that they should take responsibility for that significant devaluation of the currency. So I'll say that is the focus of the administration today.
Perhaps. Let me ask another question about valuation. And I know we'll be going around the subject because some of my clients last year said some of the stuff that OJ was saying, this my, investment I haven't made money when I compare it to dollar. And a lot of times I stop them. I'm like, oh, you did not invest dollar to bring out naira to come and make that point. Everybody's pegging their investment against dollar and ignoring the gains naira for naira. Now, yes, I understand completely the impact of the devaluation and its inflationary effect that might have eroded certain value, but that very perspective, that very mindset is switching people from believing that they didn't make any gain at all.
Absolutely correct. Because let's even take it out of that. So some dude invests 10 million with me for a film, right? I'm paying back in 3 years almost 28 million. And the position is still, I made a loss. And I'm like, hello.
Yeah.
Do you understand? I get where you're coming from, benchmarking against the dollar, but
I think
I did not make a loss. The paper doesn't say that. I'm not going to let you say that.
I think the way to then approach such a challenge would be that, as an investor, okay, maybe, or even a guy on the street, if you're approaching investments in an environment where there's volatility around your currency or concerns, then you want to invest in assets that over time, catch up or reflect the value of the dollar. And actually, real estate is a very good example of one of those type of investments. They don't necessarily catch up quickly, but over a long period of time, they do. As soon as the market starts to reflate, and then the impact of cost, all of that is obviously incorporated. I think what you simply have right now is that there's obviously a question of demand. You don't have the level of demand you once had. And so some people are obviously forced to, cut their margins, And I imagine that even agents have to also reduce their commissions, maybe, perhaps.
No.
Never. I mean, yes.
Not really,
Never.
no. 5% or whatever price.
So you're saying that people aren't negotiating?
No, everybody negotiates. No.
Exactly.
Let's be frank. Nobody likes to cut their rates, not agents. But, and it's always subject to the powers of a transaction. Typically, like every market, real estate is again not in an organized market like a stock exchange or even in developed countries. Unless they are highly financialized properties, you're still dealing with a third-party owner that can choose to do what they want within regulation, of course. And I think like real estate here is just the wilder version of that. So. Not to lose the point you are raising, those assets will hold value if you buy correct. They will hold value.
And that's why products
inflation.
like REITs are very important because REITs are accessible to the public. Individuals on the streets can buy them. You don't have to have 10 million, 20 million, 100 million to buy a property. With 10,000 naira, 1,000 naira, you can buy units and potentially over a 5-year period, it catches up with, whatever it is you felt you lost on the depreciation of the naira. There are other assets as well. Some people buy cars, some people buy gold, some people buy, if you do stocks, for example, the easiest one would be a seplat that depends, that obviously attracts foreign earnings. It's an oil company, it's listed on the Nigerian Stock Exchange. Its share price has pretty much reflected the performance of the dollar because its earnings reflect that.
But I like, I'm happy you brought up the concept of rates because I find that not a lot of people, even at the topmost cadre of none of my clients also are consciously aware of the concept of rates. And And occasionally you find in like in prop tech spaces, you find a lot of people are trying to tokenize real estate now. Taking obviously inspirations from what happened in America and trying to bring it home. However, I find that in Nigeria, we've always had REITs. We've always been there.
Well, not really. Not really. Yeah.
It's been there maybe 10 years, 15
10 years. That's so fresh. That's so fresh.
Which one?
That's so fresh. Yeah.
Who's REITs?
I think FSDH had a REIT at one point.
They do.
Yeah, they did. Yeah.
FSDH.
Not this. They were managing UAC,
It's a fund.
UPDC.
UPDCs.
Sorry,
Yeah.
So I remember they had a REIT at
And
one
even
point.
UPDCs was not.
It's not true rates. In
It's
true
not
rates,
a
well,
quite-
well, I guess what we mean by true rates is that I think with the rates, you are tax exempt. I don't believe that rates is tax exempt.
Right.
Yeah.
Tax.
And even is it a mortgage rate or they're all equity rates, which are because
What
you
do you
can
mean?
so REITs, you can have a mortgage REIT, which is more of a fixed yield security. Yeah, it's backed by mortgage contracts basically, and you can have an equity REIT, which is equity fund of real estate investment.
Yeah.
Which as long as both are securitized products, then you. Yeah, but UPDCs, was it?
But we don't have that much. I mean, Nigeria, I think we have just 2 or 3. Just 2 or 3. Yeah. So it's still fairly new, and I think that the hang up might be around the tax issues or implications. And again, the other issue is that we don't really have a structured real estate market. It's being structured, but it will evolve over time, obviously, and
yes, it needs to get more and more
organized.
financialized.
However,
And obviously, UAC represents, or UPDC represented one of the most institutionalized real estate investors in the market.
There's a very popular case right now of landmark, and the landmark a beach issue between the landmark and the federal government. I find it so interesting that we haven't heard a pin of the Lagos State government in this conversation at all. Like not even a whisper, not even a from Sanwo-Olu. Completely. The landmark issue.
I think first of all, the federal government. It's federal government land. Think about it. It just happens to be started in Lagos State. Now, if you hear the position of the governors, they're, oh yes, let's do this, because what it does is that it basically connects the economy of Lagos State with all the other economies on the shoreline. Secondly, from a political point of view, you're literally beginning to finally spread the power, because once you go out of Lagos, there's really nothing happening in Nigeria. I just give me something to Abuja, Port Harcourt. There's something.
Kano, there's a lot of activity in Kano.
No, I think Tolu is right. I mean, look, give you an example. Lagos State government budget is 2 trillion. The other states you talk about, we're talking about sub 500 billion.
Yeah.
That speaks for itself.
No, absolutely.
Connect all of that together. Landmark will be a sneeze, like, get out of the way.
Yeah.
You get?
Yeah.
So while we're whipping up all these sentiments about it, and we're talking about tourism and, first baseline, people must eat, right? Nigeria must grow. The South must become independent of the beggarly relationship we have with the Central. The states must, yes, that's the truth. It's a beggarly relationship. Everybody must find a way to begin to use the power of the coast. It's usually only Lagos State has had that power for, forever, right?
Well, I mean, yeah, but it strikes me that the project is primarily a thoroughfare which makes a lot of sense, especially if it's connecting Dangote's, or let me say the Lekki Free Trade Zone or the Freeport and Dangote refinery, particularly because of the energy share transportation.
Let me also add something interesting. Security-wise, it's easier to manage rather than going through the rainforest.
Yeah. Well, let me, see, so this road, right? We all agree it has.
I mean, besides the fact that it's also quicker and
It just makes sense, see, this is a non-issue. We're just being
No. Let me try and define the issue we are discussing. Yeah. I think it's been relevant because it's a lifestyle asset we're talking about.
and we're Nigerians. We are the one base. We got to show ourselves.
Yeah. I'm personally someone that used to go to Landmark, but I played football there and to keep family and stuff. So the recreational asset is a loss. I think we all agree that the coastal road, as far as an asset, public asset, supersedes the importance of the recreational. But the main question is that there are a few questions. First, could they have rerouted it to preserve the?
Then it stops being a coastal road, because the only other option is to then go behind Landmark because it is Landmark.
That in the plans that I have seen, it's not a coastal road all the way anyway.
there's also a cost. There's also a cost to rerouting a project like that.
It also goes into the city.
Yeah. So when you say exactly, is that the idea? Exactly. There's a cost to doing
Correct.
So,
Another major issue is that on that water corporation road, personally, I call it the worst road in VI because it's highly encumbered. So basically, on one side of the road, you have the Landmark side, and then in the middle of the road, you have a lot of weird-ass buildings in the middle of the road. And then on the other side of the road, you have a road to itself. It now combines weirdly, and it's extremely encumbered. So that's a challenge with Landmark.
So I think also, again, maybe from a physical, building challenge, generally, roads that travel through lowlands, coastal roads, difficult to maintain. Really difficult to maintain because, water, that a continuous engagement. Now, well, luckily, this particular government has proven that they tend to build roads that self-drain. Hopefully, they're, putting that into the plan, because what will be the point of building this road? And then 5 years down the line, nobody can go on it.
Yeah.
So hopefully that's been considered, because that's the challenge you're talking about, that particular road. The road itself is almost unmotorable half the year.
yeah, no, they are. So it's going to be made out of concrete, which is a lot more
Solid.
it's almost a lot more durable than asphalt.
The major issue I have is the tourism aspect. However, I've not gotten a clear picture on what the plan for tourism is, because for me, the way I visualize is that there's just going to be a long road running through, and it's just going to cut out the beachfront and no tourism.
What's actually happening along that axis is that they're also building access roads into the coastal village. Again, I sympathize, but I think that what I would like to see is the fair compensation to Landmark for the loss they might incur from these issues. But again, the minister has also been very clear that the the part of the road that's also been discussed, it doesn't belong to Landmark.
No, absolutely.
That coastline
Yes,
The
it's
coastline
federal.
is federal under NIWA jurisdiction,
Yeah.
and Landmark had always built temporary structures with it. I think the compensation will be limited to that portion and that portion.
I'm an advocate. I'm an advocate for investment in Nigeria and encouraging investment in Nigeria. I've done that for most of my career, and I believe that where a project that's being carried out by the government impacts an investment, I think it's only fair that the promoter of that investment gets fairly compensated.
Right.
Yeah, the government itself should also look for ways to use that project as an opportunity to promote investment in that area and Lagos, Nigeria as a whole. Yeah, which I suspect to be the case. because I mean we're talking about, if I recall, 5-6 lanes on each side. Yeah, this is different from the initial proposal. The original proposal was much smaller, and I don't think it was even originally planned to go through Landmark. The reason why it's going to Landmark is because they wanted more space, and I believe it's also carrying rail line.
Yes, from Jack on Did, he said. So, well, ultimately remains to be seen. That's the way I look at it. But for me, what is dear to my heart is tourism, because tourism is actually real estate. It's actually investment in real estate, to be perfectly frank. And I feel...
Well, roads are important. I'll give you a very good example. When UAC purchased, there was a hotel they purchased in Festac Town. I don't remember the name of that hotel now. Wasn't Icon.
The one at the waterfront?
No.
It's what they currently
in Golden Tulip, yeah. So, UAC bought it, revamped it. Golden Tulip also became a manager. It was managed by, I believe, I can't remember, it was an international hotel manager that was managing it. The whole idea was the government had promised to repair the Badagry Express Road. So they saw that as, a good opportunity to invest in that, and, the access road itself would draw in, investment or even, customers into the hotel. But never materialized because that project never took off. And I don't remember, but it's probably one of the weakest investment that company made. I think that portfolio still within UPDC, but it's one of the weakest investments that they made because that road never took up. Just trying to highlight, but the rail line importance of the road, a good road, networking, the location.
But they have the path. Oh no, actually, I don't disagree. Is that, I mean, I'm fully aware that if you have bush and you basically connect with a road, strip a road. In fact, a lot of asphalt there, and connect it there, that will go up. That's normal. However, and my point is that, and this is a point I've made to everybody, is that Nigeria is a blessed country in terms of resources. And Nigeria is blessed that we have a lot of water around us. Ethiopia is a landlocked country. Uganda is a landlocked country. So a major aspect of tourism revenue, a lovely aspect of it, is that you have your beach and you can optimize that for revenue for you. As of, I think, this year or last year, Egypt recorded $13 billion in tourism revenue alone, independent of whatever other resources they have, $13 billion alone. So basically, imagine in our USD and Forex issues, that the way I look at tourism is people are giving you money for free. So come and look at your country and observe your art, observe your culture. As a matter of fact, countries in Europe, it has reached a point they've started complaining about a thing called over-tourism and cultural dilution, in that there's so many people coming in that the resources just can't handle enough of it. And again, all the part of cultural dilution is more important to them, in that if I have 1 million Americans coming to my country every day, I am incentivized to start opening hot dog stands. So when you have all of these resources around you, including the water, and you are not utilizing it well, it's a waste.
But OJ, let me point out for our awareness that the coastline, particularly this Atlantic current, has also been a threat.
Correct.
Threat. Shoreline. And I mean, not sure what the long-term viability of Landmark would have been for those reasons.
So they protected that already. They did manage that.
Yes, they
already had the stone wall.
Yes, they already did. But this
Great Wall of Lagos.
that stone wall was so the same plan with Eco Atlantic and South Energy, and the entire dredging plan was to protect that shoreline.
Yeah.
So Landmark's dependence on that shoreline was limited anyways, or else unless they created some sort of artificial peninsula around that. I know that much more challenging. Now this continues. I understand that the challenge will continue to follow the coastal road as long as the coast itself.
Yes.
Mm-hmm.
Currents has to be the road has to be protected from.
Yes.
again, this is why they're going to go.
I think we're flogging this issue too much. I believe that the road will bring in a lot more players, not just Landmark. There'll be a lot more than just Landmark.
So basically, in conclusion, of this very lovely conversation, US versus real estate. So basically, if you were to advise you an investor, thank God, if you were to advise your client, and please be aware that we both sell real estate. So advise your client to consider, look, it's silly. I have X amount, and what do you think? Should I withdraw all my money and put it in USD, or should I consider Nigerian asset classes, including real estate?
Because as we already discussed earlier, the value of the properties eventually catch up. So it's not a question of you having enough wait time for that process to catch up. Bearing in mind that real estate is not a liquid asset. If you do buy property, it takes time for you to also exit it. So very important that you have that time horizon.
For me, the safe word will be diversification. You have set amounts.
Mm-hmm.
Have some in this position because this continues to favor you, right? But wherever you can, take some position in real estate because long term that's always favored everyone. It's always good. Whoever buys land now, 10 years from now, most likely be smiling at this landmark.
You live in this country and you want to make an investment. Real estate is a portion of that diversified investment that you should make. Like any good fund manager, like a CEO or so, there will be, and you reiterated, there'll be a diversified portfolio. I will add that dollar itself is not necessarily a currency.
It's an investment.
Currency not necessarily an asset or investment, but it is a cash asset. So what I'm suggesting we invest into for what will yield, and also because it's a currency, it's not immune to inflationary,
Correct.
even
Changes.
national. Real estate helps to hedges inflation and it will retain value if you buy the right properties and so on. So diversify, buy real estate, and don't give hope on Nigeria.
Thank you all so much for our pilot episode. When I'm reviewing my 100 episodes back, I'll look back to this episode. I'm like, well, we actually pulled it off. Thank you.
Thank you.